So is there any restrictions as far as the investment type, whether it has to be commercial or residential, or is there flexibility as far as what they can invest in?
It can be commercial or residential. It does have to be used in a trade or business, which means you're going to rent it.
Rental property, okay.
Right. Now, it has to be new property as well. So the concern is here.
Yeah, the reconstruction, right?
Concern is there's only so much land. And the law originally expired at the end of 2008 and 2009. And it's staggered depending upon what type of property you were buying. Congress has gone in and amended this law to December 2010. So your purchase has to be made before 2011. Now, the bigger concern, though, is how much property is going to be left. And the property has to be placed in service by 2011. So if if there's land left at that time, and somebody runs out and grabs a shovel and digs it in the ground on December 31 and say, oh, here's my GoZone property, it's not placed in service then. So bigger than the time issue as far as date-wise, I think the bigger issue is how much property is available.
Right, and how quickly they can get them built.
There is some sense of urgency to go down and stake your claim on, I want this property, because we don't know the other developments that may take place and if they will take place in time and if there's even land for them to take place on.
So what I'm hearing is with this large loss potential, now you go back up to 5 years, and if you don't use it all up in the 5th year, it carries forward to the 4th, and so on and so forth. Conceivably, you can free up a significant amount of tax dollars. So it's almost like the government is helping underwrite the purchase of this piece of land.
I have a particular scenario that you can go to our website on. I've done some webinars. So if someone's interested in partaking in one of those webinars, they can go to our website and see a calendar of these.
The website is fwgcpa.com.
Good cue, Dan. So anyways, I might look at, I don't think I'll put my presentation out there, but what I will do is I will put out my scenario out there that you can look at. And the scenario assumes that you're buying a $600,000 property. And if you combine that with GoZone, or not with GoZone, but cost segregation study analysis, the two combined, and they're completely made up figures on my part, but if you run through and say that my assumptions are correct, on a $600,000 purchase, combining those two opportunities, your tax benefit can be as much as, it was almost $120,000. This is very close, between $100,000 and $120,000. Now, let's say you put 20% down on a $600,000 property, that's $120,000. Well, the government has helped fund your down payment on that property.
Yes, I like that. That 120 could come from a retirement plan.
It could.
They could partner the rest with.
And then you get the tax savings of
absolutely.
120.
That's a fascinating. Yes, I get occasionally those clients that call about that because they've heard about this through other investors national that are talking about this, but they don't understand anything about it. I'd love you to be able to use you as a resource for those clients that have those questions, because very little advisors understand the concept at all. So,
and it is kind of complex, and it is mandatory. So those are the kind of two things if you fall within the criteria.
And that concludes the segment of BBN TV. Thank you, Todd. Thank you, Carol. And thank you for watching.